Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 1st, 2019. Now, a very volatile week coming this week. We've got the non-farm payroll number. We have Canada Day, a holiday on Monday, and then I believe we have the Independence Day in the US on Wednesday or Thursday of this coming week. And on top of all that, guys, we've got the non-farm payroll number on Friday, and of course, nothing but headlines coming out of the G20 summit that, again, I think this coming week on Sunday we are going to see a significant gap in the Forex market, particularly on pairs like dollar yen, US Swiss franc, anything equity based. It's my understanding that Trump is not going to put additional tariffs on China and everybody is back to the table. But again, these are all rumors and we have to see how this plays out. Looking at the dollar index via the VantagePoint software, we have a critical reversal indicator on our medium term crossing our long-term predicted difference. Now, the neural index is not completely in support here, but again, as I've discussed very often, that the dollar is usually strong at the end of the month and the first week into the new month. So I don't see anything that's changed here, guys. We have very, very significant support based around that yearly opening price at about 95.59, so a lot going on here. It would appear, if nothing else, that the dollar is going to correct higher towards 96.20. Now, if that's the case, then we will see stocks recover also next week. This is an absolute concern, but what I have noticed over the last, basically since about 2011, is 2012, as the dollar, as the S&P 500 goes higher, it's actually the US dollar that goes higher with it. So could be a decent week next week for stocks and the US dollar. But I also believe that that's only a short to medium term play and that the longer term picture is seeing money going into gold. Now, whenever I see money going into gold like this, again, in my respectful opinion, there's several currencies that are going to be affected by that. It would strengthen the euro, the Aussie, the New Zealand, the CAD, the Swiss franc, a number of different pairs. Now, we do have verified resistance up here on gold, and this is going back several years. You can see it's all the way back, but the main level that I'm watching is 1434 to see if we can clear above that. Now, we've got a short-term top in place at 1442 that we should respect at this particular time. It's a lone bar sitting there by itself. Now, I would fully expect on these headlines coming out that gold would move lower, at least in the short term, also based around a known cycle of dollar strength. So we would look for gold to hold above 1374, and I would say that a retracement is imminent at this particular time. So we're going to continue to watch this, and once again, the medium term crossing the long-term predicted difference is a leading indicator, but the neural index is still not convinced that gold is going to go too much lower. Now, when we cross-reference that to the stock market, if these headlines are true, and again, this video is being produced on Saturday before the market opens, not after it. This is not eyewitness weather here, guys, where we forecast something that's already happened. This is, again, before the market open. So when I'm looking at this right now, I still have the same verified resistance up here at this 2964 handle. There is a very strong possibility here now, guys, that the equities could pop towards 3,000. But once again, I believe that any move higher in stocks ultimately is going to be met with selling. It's just a question of how much the market is buying into what Trump is saying and what China is saying. We don't have verification on any of that at this particular time. And even if it does settle, the Fed is still talking rate cuts, all of these things still pointing towards a recession, which is not good for stocks. So we have to bring that basic fundamental into this. Stocks have been in a strong rally since 2011, 2010. It would be perfectly normal for these stocks to go lower. So we're going to see how this one plays out. But we've had a full retracement down to our T-cross long, and the indicators are still warning that we're going higher. Now, a lot of this is optimism based around, again, the G20 this weekend. So we're not really positive what's going to come out of this. So I would strongly recommend that everybody just take a breather on Monday and Tuesday. The Canadian markets are out on Monday. U.S. markets are out on Thursday. The non-farm payroll lingering there. So again, a very volatile week ahead. With oil continues to be a leading indicator. We can see that oil has significant resistance at 59.85. We're starting to turn lower. We've hit this verified zone as identified by VantagePoint 3 days in a row. And again, in my respectful opinion, we've got to watch out now. Oil could pop higher if stocks do. So the direct intermarket correlation we've got to monitor. But whenever we see a signal like this, guys, the medium term crossing the long term predicted difference, when the neural index is in agreement, our RSI is overbought, there is no buy trade there. And if there is a long trade here on oil, I believe it will be short to medium term, and it will be based on those announcements that we're hearing. So be very, very cautious with that. Now, with our main Forex pairs this week, if the stocks rally and gold moves lower short term, that is not going to benefit the euro, guys, not one bit. So the euro is, again, stalled out here. We're on the cusp of a potential reversal signal. We want to watch this one very, very closely. The medium term crossing the long term predicted difference. We're looking for the neural index to turn red. Our RSI is already starting to move lower. We've got a verified zone that's formed. The top of that zone, 114.13. Clearly, at least a corrective move is in play, but I will further advise everyone that based on the overall range here, we are still within the overall range, but we are pushing to breaking through to some new highs. So ultimately, again, gold is going to determine what happens with the euro. If stocks go flying higher, guys, the euro is the direct intermarket correlation here is that stocks higher, euro lower. I know that may sound foreign to some, but at least for the last year or so, that is the direct intermarket correlation that I've seen. Now, once again, we certainly are speculating this weekend here, but when we look at the US Swiss franc, once again we've stalled, and we can see that we've got the exact same signal on the US Swiss franc that we have on the dollar index, that it's pointing higher. The neural index is very conflicted here. So again, I think it'll be a corrective move, but if stocks again move higher, then US Swiss franc is unlikely to move much lower from where it is. It's actually likely to move straight up. So once again, we're watching the S&P 500 and the global equity markets very closely on how they're responding to this weekend's G20, but right now the headline news coming out of there is positive. So we're going to be watching these levels very, very closely. Right now, we appear to have a short-term bottom in place at 96.93, and I fully support longs off that particular area. Now, as we look at the British pound US dollar, probably not going to move much from here. We've talked about this one in the VantagePoint live training room, had several very lengthy discussions about this, and I've warned everybody about two levels. One is 128.50, the other one is this critical verified zone at 128.10. In my respectful opinion, if and when we take out 128.10, then this thing is going to run all the way back up to 132, and we're going to have a very easy long trade. But I'm not convinced that that's going to be next week. We're in a period of known dollar strength. Equities turn around, the dollar turns around. That's probably going to hurt the British pound and the euro. So be careful of this one. But right now we're very sideways around this verified resistance, and we've got good, strong, verified support down at the 125.06 area. I would be far more comfortable with longs in that area than I would be where the market currently is. Our T-cross long at 126.82. We're closing 126.82. We're dead flat here, guys. So for next week, shorts carry a slight bias, while below that key area between 127.50 and 128.10. Now with dollar yen's going to be a sneaky one this week, guys. And again, it's all about stocks here. If the market, the S&P, the Nikkei, the DAX, they all pop higher on what's going on with the G20, then dollar yen is going to pop too. Here's where I would be very cautious with this one. I cannot rule out a 100 or even a 200 pip gap in the market on this Sunday night, because the second they get in there, anybody who's short and hears these announcements may want to dump out of their shorts at this level. And if they do that, it's going to cause a significant spike on the dollar yen. I would say there's at least a 60% probability that that's going to happen. So be very careful, but watch our verified zones. Those are coming in at 108.80, and more importantly, the one I would really pay attention to is in this 109.50, 109.93 area. I still fully support shorts on any kind of rally higher, but let's let this one shake out first. Let's get into Tuesday trade before we really get aggressive either way, but be very careful of, again, a significant short-term gap in the market on Sunday and Monday. Okay, guys? The T-Cross long, 108.11. We're closing 107.86. I don't think 108.11 stands a chance on Sunday night. If any of the rumors we're hearing are true, people are going to bail out of shorts here very, very quick. Now, with the long-term shift, we've got three main commodity currencies, guys. The US CAD, the Aussie US, the New Zealand US. In my respectful opinion, we are within a matter of days, weeks, or short months before all three of these currencies reverse to the upside. What will trigger this will be a further breakout in gold. And I will point out that in this most recent breakout between gold and the S&P, it was gold that broke out. The S&P is still within its range, right? Gold is not. It's moved higher. Even though we've got that resistance at 1434, there's still, there's more money going into gold, more money going into Bitcoin. Also, I'll point out, than it is going in, to stocks. That's just a fact based on what we see on the charts, right? So if, everybody is happy, we get a pop in the equity markets, that could be the last one. But if gold continues to advance, US CAD will move lower, Aussie US will move higher, New Zealand US will move higher, based around its high correlation to gold. But for now, where we've got to be very, very cautious with this particular pair is we can see the medium term crossing the long-term predicted difference to the upside. If our neural index turns green, we've already got an oversold condition on the predicted RSI. This is pointing towards, if nothing else, a corrective move back towards the 132.57 area. As I've stated in the live trading room and with my own direct clients, I fully support longs at 130.55, stops around 129.90. We want to put a tight leash on this thing, but reversal trades like this very often work. Just remember, the Canadian markets are closed on Monday. They're not coming back in until Tuesday, okay? So Tuesday's the new Monday next week. Be very cautious with this pair, but watch your oil contracts and continue to monitor these indicators. This indicator here from VantagePoint, again, is one of my favorite in the software. The medium term crossing the long-term predicted difference, but I want the back support of the neural index. If I don't have the neural index, a lot of times I'll still go in, but I'll pause and wait. In this particular case, when we look at this, major support at 130.55, medium term crossing the long predicted difference, a heavily oversold RSI, it screams of a counter trend long, but keep a tight leash on it. Okay, guys? Aussie US and New Zealand US. Once again, I've talked about these levels. I'll bring them up again this week. If we can take out 70.50, stay above it, and more importantly, this verified zone up here at 70.68, we could be looking at a much longer term reversal on the Aussie US. Remember back in 2011 here, guys, where the Aussie currency was when gold started to collapse back in 2011. That's basically, if we go back, I can go back 10 years if you want and show you what I'm saying and verify it, but you can see that the Aussie currency was at $1.13 to the US dollar. And that's where it peaked, and that's where gold peaked back in 2011, 2010. Let's not lose lose sight of this, okay, guys? Let's not. We don't always want to be playing the short game here. The long game can be very, very lucrative if we know what we're looking for, right? So if gold is getting ready to go into a long-term reversal, it's been going down for basically since 2011. If that's it and we're on the rise, then the Aussie's going to be on the rise. The indicators from VantagePoint, very good call off of here. The medium term, the long term predicted difference with the neural index, fantastic trade. But we've got to break through this area, guys. If we can't break through that area, I think in the short term, we're likely going to correct a little bit back towards the 69.55, but towards the end of next week, we should be looking for longs again. And the same thing applies to New Zealand. We're up again, the same formable resistance, but New Zealand a little bit stronger, right? So even though the RBA is going to be cutting, and the RBZ is going to be cutting also interest rates, so is the US apparently. So if globally they're cutting interest rates, then basically the US has the biggest at 2.5%, also is got the biggest room for cuts here, right? So that would, again, could be another nail in the dollar's coffin, but I don't think that's going to be next week. So let's see how things play out. We'll go from there, but again, we're going to have a very, very volatile trading week next week, so take good care. So with that said, this is the Forex Weekly Outlook for the week of July the 1st, 2019.